Shadim Shari, morning. Starting the second half of the year, July 1st, 2024. How time flies. Wow. Needless to say, the performance of the portfolio was underwhelming because, of course, I have when 40% of the portfolio is in fixed income slash cash. That's not gonna stay up with the S&P 500. Um, but thankfully, it's also did better than the IWM. That's okay. That's part of the game. Sometimes you're gonna um, if for those that try to benchmark how they do, don't the way we do it in the business. By we, I mean that when I was back in the business of asset management, we don't compare to the S&P 500. We put the S&P 500 up there as a benchmark, but we also compare our portfolio with the proper benchmark. For example, if you are a balanced portfolio or your money is managed under a balanced strategy, that means 60% equity, 40% uh, fixed income, then depend on how your each portion is managed, because once again, it's not just 60% equity and all 60% is in the S&P 500. It is international, small cap, mid cap, you name it. It's all spread out. Same thing with fixed income. It's not all TLT. It could be muni bond. It could be high yield bond. All kind. Okay, it's somewhat not straightforward, but for the sake of this uh, discussion today, for example, if you have 60% in S&P 500 and 40% in fixed income, you should create a benchmark for yourself using, say, 60% S&P 500, 40% bonds, TOT. This way, let's say bond was 0% return, including all the income, total return. Use total return because then it will capture all the dividend from both equity and uh, fixed income. So let's say TLT is 0% return, including income. Then your portion of your fixed income is 0% contribution this first half of the year. And let's say your equity return, say, 10% for 6 months, but you can only use 60% of that in your benchmark. So your total return there is 6% contribution. So net everything together is a 6% return for the first 6 months. That's how you should construct a benchmark to gauge yourself on how you're doing, instead of saying stupid things like, oh, I underperformed the S&P 500. It's a general statement when I say something like that, but the honest and correct way to benchmark yourself is doing something like that. It requires a little work on your own to create a benchmark. That was part of my job when I was in the business. I was what they call an asset allocation. It's a title that you don't hear. I had many titles, but one of them was an asset allocation specialist. My job is to create asset allocation benchmark, as well as create proper allocation for each client and construct a benchmark that fit the measurement. Okay, so that's what you should do. So don't measure yourself. I know I'm guilty of using the word, oh, my portfolio have my portfolio performance component of fixed income drag down the overall performance. I'm guilty of saying that many times in the past. And in a way, yes, it did drag, but in a way, it didn't. For those that pay attention to how I performed last year, if I take, you know, X% of my portfolio and allocate to TOT and X% allocate to equity, the proper computation, my overall return of 24% is pretty damn good, given something that is 40% into cash and fixed income. But not to toot my own horn. Let's move on to the second part of the year, and hopefully we can do better, right? Since Anthony, of course, for those that remember, Anthony portfolio is 100% in equity. He outperformed everything, and the first 6 months of the year, his portfolio has outperformed all of the benchmark. Okay, so he has nothing to complain about. Getting, I think, 16% return or something like that. It's pretty darn good. Mine, of course, have the TLT component, so it ain't gonna outperform anything. Not right now. Okay, let's focus on some med device diagnostic for this, since I forgot to do that at the end of the Saturday stream. Medtronic, I actually like. Okay, so if you want to add, nip, restock, I am. Okay, it is here at Reflow. Last time, well, let's go back 7, 8 months ago. Consolidation, lift off, support. Okay, so if I want to do it, if you want to do a stop, use the gap up low at your stop, and then buy back at the 61.8. So you're not talking a lot. Okay, so you're talking about a stop at 77 and a half, 77.1, between there. Okay, the reason why I say 77 and a half is that the bottom of the candle. Okay, but that should be the tightest stop you have, and then of course 77.11. And then if you want to have an order in to buy at the fib 76.6, you can, but for sure gap fill 75.74. Okay, so there's 2 area for stop if you buy here, and 2 area to add if you buy here. Next, pen, I like. Okay, I will add. Let me show you what's going on here. Okay, so for those that remember, I turned bullish here, and I didn't mind. Okay, I didn't mind this action at all, because once again, when you have declining volume, I don't care. Okay, you want to buy, add on declining volume. That means a lot more. And guess what? I add on rising volume. I like that. Okay, to me, this is bullish here. Look, there's more volume here on this move than here. More volume here than anything going back in a long time. It's a good thing. I like it. Okay? Does that mean that it's not going to go any lower? No. But when you have this kind of significant volume, follow the volume. Okay? Would I buy and add on dip? Yes. Yes. Okay. LH. I like. Would I buy back what I trim at 200? Yeah. But 210, I have lowered my trim order. I had a trim order higher, but I'm gonna lower it down to where the 100 is, just to be disciplined. It's a small trim order, just so that if I have a week like this, I don't miss it. Okay. But as far as the bigger trim up there, 210.66. Okay, that's the place. last for today. EW, I trim per my mentioned before. Above 92, I'm starting to get out. Okay, and the big one for everything that I have left is at 90. Well, I have two order, one at 95, and of course one right above the 52. Okay, I think it's like 96 and a half or something like that, but I'm watching it closely. I'm also had my stop in mind at I'm using the low candle of Thursday, which is 92.16. Yeah, I it's I don't have a lot of share, but given that I bought them below 88, I would like to not give up all the gain back when they retrace back to 88, and they can. Okay, this stock is this entire sector is not a field to be uber bullish with, and that's it. Let's have a good week. Once again, econ data. Watch the econ data. I don't know what's going on today with econ data, but before I go, let's log into the econ website to see what is in store for us. Let's take a look. I know for sure it's gonna be while you have July 4th coming this week, so I'm not sure when the jobless data is gonna come out. That might change the scheduling of I don't know, but let's take a look. Let's take a look. I don't know. So I don't know what's coming out today. If anything good coming out today. But we will find out in a second here. The computer is kind of slow this morning. As soon as I'm done with this stream, you bet I'm gonna relaunch the computer so that the trading day will not have any glitch. Okay, I got there. Okay, let's see. 10 o'clock, you have ISM, manufacturing, construction spending. Those are okay, econ data. But, you know, any reading over 50 is still strong. Anything below 50 signal weakness in the economy. So we'll see. So that's today. Tuesday is jolts. That's important. Okay, so the big one, Tuesday, you have Powell is speaking at 9:30. The Fed, 9:30. You have jolts, job opening, jolts, job quit, global manufacturing. No, no, crude oil. Yeah, that's it. So yeah, but as far as Tuesday, Powell and jolts. Wednesday, um, mortgage, job cuts. That's important. Oh, and of course, jobless claim. So they move it up to Wednesday because of the July 4th. So Wednesday. So Tuesday, Wednesday is jolts and jobless. All right. Oh my goodness. It's going to be crazy. Okay. So Tuesday, Wednesday, big thing going on. Thursday, of course, nothing. And then Friday, you have payroll, unemployment rate, participation, government payroll, manufacturing payroll, all kind of stuff, fake stuff coming. The deluge of fake data is going to be coming to the market this week. Oh, fraudsters, scammers, liars. That's what we got. We got corrupted system of government. Oh, so sad. So sad. All right, people, out.